Bitcoin inches closer to all-time highs as macro uncertainty eases. But for how long? We cover all this right now in the Collective Shift weekly recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes. More green in the markets for Bitcoin and all the altcoins, really, Simon.
Yes, it's definitely a bull market again, isn't it? I think no one's in denial of that anymore. I think the bears have definitely decided to leave, and as Bitcoin's literally just about to tick over into new all-time highs, I think that the market is, quietly getting excited again. And I think it's still a game of, though, not all altcoins are performing as well. Like I think across the board, pretty much all altcoins have actually gone up. So it is actually, everything's rising with Bitcoin, but there are definitely some that are way outperforming others. And as we've always said, I think keep an eye on the ones that are outperforming because they're likely to continue to outperform in the future, I think.
Absolutely. I think, time of recording, as you said, I think Bitcoin has, in the past hour or so, just had its all-time high daily close. And then it had its highest ever weekly close earlier on Monday of this week. So all little things getting checked off as we inch closer, potentially up towards 110,000 US dollars and through that. Certainly in recent weeks, we've had a very notable trend, I think, with US equities or US stocks, continuing to climb. You've had treasury yields increasing back to sort of their worrying levels that people were freaking out about a month ago or so. And at the same time, so US stocks up, treasury yields up, and you've had the dollar weakening. Meanwhile, you've had European stocks and other stock markets really rallying. So I think the big takeaway that I've seen a lot of people, point this at is really that people are just sort of lowering their exposure to the US for various reasons, some of which we've talked about over the years. And meanwhile, gold has still been climbing. It's fallen from its all-time highs, but in a market like I just sort of explained, you would expect gold to sort of be selling off, by quite a lot more, but it's still been holding up relatively okay. And Bitcoin and gold now are very, very close to all-time highs. So, it's a very notable, I guess, trend we've seen in the past month or so. And I think people's awareness, this multi-year trend, I think, of the broader public and the investor community, their awareness of just how tricky or how unique this fiscal deficit and how much debt the US is in. I think more people around the world are sort of cluing into this fact about, okay, how sustainable is this? And I think we saw some headlines earlier this week to do with some, rating downgrades from the likes of Moody's and other sort of rating agencies, sort of, I guess, putting more pressure and spreading the word about, hey, all this talk that Trump has been going on about Doge and all this, these cuts that planning for the US government and all these spending cuts that we saw Elon Musk involved in, all of that has proven, as we sort of said at the time, it's proven to be just a drop in the bucket, really, compared to all the fiscal deficit that is just, by all accounts, looking to be continuing to expand as Trump gets his new tax bill sort of through in the US. So that's been very beneficial. And I think since those reports have come out about just how wide the deficit is looking to get under Trump's new bills that he's pushing, since that news has come out about last week, I think that's been, at least in my opinion, one of the real pushes for why Bitcoin has rallied and continued rallying. So yeah, there's been a lot playing out since our last podcast, Simon, but I think certainly that has been one big factor at play.
It definitely has. And I think what I'm finding really interesting is that, and I had this conversation with my parents over the weekend to a degree as well, is that the markets are actually very close to all-time highs. So even the stock market's only 3% of all-time highs.
Yes.
Bitcoin is 2% at this current time. So the markets are actually getting back up there, and yet my parents were still going, oh, geez, Trump has ruined the world kind of thing. And it's just this constant, I guess, this is a whole other area, but the mainstream news was very happy to go down the negative path of what, the Trump was doing and things like that, because I guess that sells newspapers. We all kind of know that. But the market is quiet now, and we're close to breaking all-time highs. The tariff stuff is kind of mainly behind us. They keep kicking the can down the road. There's all these 90-day plans in place, but I think all these 90-day plans, like the China one, I think they're going to become permanent. I think there's the markets have priced a lot of that in, which is why at the news of that the China US tariff deal, the markets didn't really pump off the back of that because the markets had already started to price that in when they started having these pauses, when they started having Trump calm down his rhetoric on it. So the markets are forward looking. The markets had started pricing this in, and nobody seems to be awake to the fact that we're close to all-time highs, and nobody's sitting there patting themselves on the back saying, hey, look, it's actually looking good. Maybe everything wasn't as bad as it seems. So I find that very interesting that we're just at this precipice where markets are ready to go, I think. Tariff news is kind of calming down and probably over. I think it's probably all basically over from the grand scheme of things. Sure, there's going to be some more deals to be done, but I think it's all minor now. I think the markets have priced these things in. I think there's certainty around tariffs, and we're moving on to the next news cycle, which is great because that one was quite, I guess, disruptive to crypto especially, but it's behind us now, and so it's okay moving on to the next things, I think.
Yeah, absolutely. I think the next, once all this plays out, I think the focus will start to shift on, all right, how much of an impact are tariffs having on the global economy, which, as we've been saying, we won't really get a good read on that until, call it Q3, like much later this year, certainly in the second half of this year. And then from that, you'll probably get reactions to do with monetary policy, like central banks. We saw Australia actually, as expected, they cut rates yesterday. And the US, is still projected to do multiple rate cuts, likely 2 rate cuts still in 2025. So yeah, as you said, Simon, I think the tariffs have fallen into the background. There'll be trade deals likely announced with South Korea, Japan, India, all sort of slated to be coming up in call it May or June. But again, it won't really be that price sensitive of an announcement once that does come through. So we really are, again, for the short term at least, really in a period where uncertainty has significantly eased. And yeah, it feels like a lifetime ago in a way since the April 2nd sort of hysteria and just the mass uncertainty, which risk assets such as crypto took a massive hit. Rightly so, as everyone was taking chips off the table. So 30-day returns for some of these major cryptocurrencies. We've seen ETH notably is up 50 to 60%. Bitcoin is back just about near all-time highs. And the likes of XRP and BNB really trailing behind even Bitcoin at even though it is their valuations are significantly less. Even they haven't been able to keep pace with Bitcoin. So even with this risk-on sort of appetite, we've still seen Bitcoin dominance. Last time I checked is at around 64%. So still very much near multi-year highs, near its 4-year highs. So that's all very notable. And even though we have seen that rise in Bitcoin dominance, we have seen still some really great returns in the likes of Sui, up 77% the last 30 days. Hyperliquid up around 46% there. So as we always have said, a lot of disparity or dispersion in like different altcoin returns there.
Yeah, and just on the Bitcoin dominance, I mean, we saw it actually did look like it was starting to drop, and everyone starts on Twitter screaming about alt season's coming. Like, I think that drop was predominantly due to the fact that just Ethereum did outperform Bitcoin for a while because it still makes up such a large percentage of the market cap compared to everything else. So Ethereum moving up or down has a bigger impact on the Bitcoin dominance than anything else. So that little period where Ethereum, quite rightly had a chance to outshine everything else, that made Bitcoin dominance move, nothing else really, because Bitcoin is still pretty much the only crypto that is sitting on its all-time highs. Solana is nowhere near. I guess Sui is kind of close actually, but nothing is anywhere near their all-time highs. It's literally Bitcoin, and that's why Bitcoin dominance is still so high, and I can't see Bitcoin dominance still going down. I suspect it will go back up and hit a new all-time high in this cycle simply because once Bitcoin breaks that all-time high, I think we could go on a run and nothing's going to be able to follow it in that period of time. For
sure. I think now it's similar to what we just said about macro, uncertainty easing. I think it sort of makes sense now that we are going back to some crypto-specific sort of factors and, price-sensitive factors in just the crypto space, which we haven't really talked about in quite some time, with tariffs dominating really 2025 discussions and just Trump in general. But here we are with a big breakthrough likely coming through with a stablecoin bill, potentially in the next 24 hours or so, going through and going into, I guess, the White House or Trump, ready for him to sign it into law. So can you just maybe bring listeners and viewers up to speed here, Simon, on what this bill actually is?
Yeah, so this one's the Genius Act. I don't think it's quite that close. I think it's still got to get... It was a pre-approval to go back into the Senate. So it's not actually ready to go to Trump, I didn't think.
No. I think in the next 24 hours or so, they're doing, I think, a big vote. And I think that might be the last step.
I think it's actually still... This was a vote to get it back in because it's got kicked away and it's now been brought back in. So there's... Politicians and laws are very different, but this is
things are going in the right direction. Yeah,
it's going in the right direction is probably how we should preface that.
Yeah,
but this is just a stablecoin act, which is getting a lot of the requirements into what makes a good stablecoin, and so simple things like must be backed 1-to-1 with liquid asset like a U.S. Treasury, having some oversight of what it is, mandatory audits, all these kind of things, which I guess a company like Circle kind of does. And I've always said that they're going to use Circle and USDC as the base case of what a stablecoin should be. But I think what we're seeing here is what I've been harping on this for a long time, that I think stablecoin regulation is probably the biggest thing for the US to do, because what they want is to make sure that the US dollar is the dominant dollar used in blockchain technology. So I think this is a really important one that they should be focusing on. And basically it means then we will have a tick of approval from a government organization that the stablecoin is okay, which brings confidence, which brings trust, which brings more liquidity into the space. Now I know there's two confusing things here, because there is a Genius Act going through and there's a Stablecoin Act going through. So there's two kind of opposing kind of stablecoin regulations going through, which is why I think this could still go around for a little bit longer, because I think they might have to say, hey, we don't need two of these, we might need to amalgamate these, because I think they were brought in by different parties. So it is confusing. I don't fully try to understand exactly how the US works, but the fact that they're still pushing this, I know they're getting on the news cycles to talk about this more, so it's being prominent, it's being talked about. It's important for the US, I think, and if I was the US government, I would be wanting to make sure the stablecoin regulation came through strong, because stablecoins being used on Bitcoin, stablecoins being used on blockchain is just the biggest use case, and they need to make sure that they've got wrapped up and kept in the US. And it's going to get through. Something of this is going to get through, because it's what's needed, it's what the industry wants, and it's what people want to have that trust in the space.
Yeah, well said. And I think a lot of regular investors might be wondering, stablecoins designed to, obviously by definition, be pegged to, in most cases, like the US dollar. How do I get my exposure? What's it mean for my bags? Is a very common question I get, and I think we always say, yes, this is great for stablecoin adoption and great for crypto adoption more broadly. So the answer I always give is indirectly your exposure. If you're in layer one blockchains, like that is one really, I guess, straightforward way to get exposure to just stablecoins taking off. It is ultimately still a very indirect way. Some people, if there are certain companies out there that are leaning into stablecoins that are publicly listed, that could be another route you can look down. But otherwise, I think, Chris Boniski, got a tweet from him just on here. In his opinion, ETH is like a really straightforward, I guess, way to get exposure to stablecoin adoption. And also, Solana technically is also in there. And then obviously Tron, we've seen a really strong stablecoin adoption over the years, particularly with Tether. So that's one to monitor as well, and seeing how Tether, how Tether is treated and what this means for Tether once this law, this bill does come into law. That will be something to watch there, and that will likely have ramifications for the outlook for TRX. But ETH and Sol, and even Sui, I would put in there as ways to just benefit in terms of broader stablecoin adoption.
Now, I think Tether are watching this very closely, and they will either do everything they can to make USDT compliant with it, or they will split to a degree and have a US
Yes, I
compliant
think,
USDT
yeah.
and another one. But the other thing I'm thinking of is that this is now going to be banks are going to create their own stablecoin. And
Yes.
so that's trust. A lot of people, rightly or wrongly, trust their bank, and now their bank has a stable coin. Then they'll start using it, and then it becomes even more abstraction from it to a degree that people will be using these stable coins but not really know it because it's a regulated space. So therefore, it's safe, and I think people will start using them more without even knowing it again. And that's just more of bringing blockchain to real world use case without people even knowing they're using blockchain rails, which I think is important for the space going forward.
Yeah, that's right. And in terms of stablecoins and companies leading the way there, we talked about Visa and MasterCard recently, but we also had Stripe, which we have talked about on this podcast before. One of the larger payments companies globally. They acquired Bridge, I think September, October. That acquisition was finalized in February. So Bridge is basically a stablecoin infrastructure provider. So that's now a subsidiary of Stripe. And now we've seen, just a couple of weeks ago, Stripe announcing a new stablecoin product, essentially. So they're going to allow, I guess, merchants to have stablecoins, I guess, as part of their accounts. So they're able to send stablecoins maybe to different merchants globally. They're able to receive stablecoins, and they're also able to hold stablecoins in their accounts. So thinking of ways to manage them, potentially earning a yield on them. You could see some integrations potentially in this sort of product that Stripe could have on the cards, in the coming months once this does roll out. But it will be available in over 100 countries. Australia is not one of them, but I think eventually, should adoption really go well for this particular product, we could see this really taking off. And just another example here of, I guess, what these payments companies are doing in terms of integrating with stablecoins. So, yeah, they're like Stripe explained why they're doing this in their earnings call and whatnot. As always, a lot of this comes back to access to the US dollar, as you've talked about a lot, Simon, and also just cost efficiencies as well, in terms of circumventing those really like high fees that you do get when you do transfer money globally and you're swapping between currencies. So yeah, happy to see that come through. And yeah, it's really cool. Ultimately, now we're in mid 2025 and we're seeing not every fintech, but a lot of the major ones coming out with new stablecoin products. And yeah, ultimately it's great news for crypto.
Just scroll back down so the viewers can see where it says that are available in 100 countries. Stop there.
Yeah.
So it's saying here that the 100 countries, and it says including Argentina, Chile, Turkey, Colombia, and Peru. And so it's specifically called out a few countries there. And what do all those kind of countries have in common? It is they have their own poor local economy and their own poor currency. And pretty much all of those countries, I don't know about Turkey, but I'm pretty confident all the other ones have their own black market US dollar currency. And so
Yeah,
it's no coincidence that stablecoins are wanted by residents in these countries because they already use US dollars. And so why was Australia not on that list, as Matt said? Because Australians have a strong economy and they have the Australian dollar and they have very little use for the US dollar. So it is these struggling countries or these financially struggling countries where the citizens already want a stronger currency to protect their wealth. They use US dollars. Of course, then if they have access to stablecoins, they're going to take that up and they're going to use it more. So it's a bit of a no-brainer. It's clearly where it's going to go. Eventually, it could come to Australia and you just might see your bank account have a column with Australian dollars and a column with a US stablecoin, sure, but like they're putting it where people want it, where people want to use US dollars.
Yeah, absolutely. In terms of altcoin updates, for the last couple of weeks, yes, prices have rebounded, very strongly. In terms of fundamental updates, just quickly from me, we did see Ethereum follow through with their Pectra upgrade. So yeah, their biggest upgrade since in over 12 months, and that went through seamlessly. So overall, ultimately, there was, I think, 11 or so features or parts, subcomponents of this upgrade, but mostly it had to do with improving user experience and also just staking efficiency for validators and whatnot. So that went through, yeah, all fine. And more layer 2 scalability, I think, was also another benefit of that. So yeah, Ethereum continues to work on that. I don't know, it's not quite a rebrand, but I would say it's a concerted effort to sort of revitalize and concentrate Ethereum's vision. We know, in a way, from an investment standpoint, a weakness of Ethereum in many ways has been its lack of leadership, that has held it back. I guess from an investment standpoint, it has benefits that's an I guess characteristic of Ethereum, but certainly its lack of leadership has really seen the likes of Sui and Solana really catch up quite quickly. So we've seen a bit more of a concerted effort to get, I guess, a lot more value capture or improve the education of ETH's value proposition. I've noticed that in recent weeks, and that may be assisting with, ETH's value really going on a solid run in recent weeks, but few and far between once you look at the yearly chart or the 2-yearly chart there, Simon.
Yeah, people like to point to a reason why something's outperformed, and so this was a clear one to point to why Ethereum has outperformed in the past month or done really well, especially against Bitcoin for that brief period of time.
Yeah.
So yeah, it could be true, but maybe it was just Ethereum's time, and maybe the market just decided that it was undervalued.
Yeah.
Who knows? But it's outperformed recently, which is great for Ethereum holders. It's upgrading, which is great, I guess, for the long-term viability of Ethereum. Still a lot of work, but Ethereum's still there, it's still building, and it's not going away. There's no way it's going away anytime soon.
Yeah, for sure. We have seen some activity fundamentally on Solana really tick back up, and Pump.Fund is once again, surprise surprise, at sort of the really among the leaders there in terms of revenue generation. There's a bit of an update there, Simon, in terms of Pump.Fund's sort of fee structure in recent weeks.
Yeah, so for those who don't know what Pump.Fund is, it's probably, I guess, one of the most successful crypto projects of 2024, I guess, and are still going forward in 2025. It was a meme coin creation site, basically allowing anybody to create their own meme coin, and that basically birthed a lot of the meme coin mania of 2024. So it has been an incredibly popular project. It's been an incredibly profitable project. So when you create your own meme coin, you do get charged a fee, and so all that kind of revenue goes to Pump.Fund. They don't have a token, which I don't necessarily see as a bad thing, because I don't think all projects in crypto need tokens. So it's a very, very profitable company. It was making a lot of money. But they've also decided that, hey, for us to continue to make lots of money, and this is, I guess, a game theory to a degree, but, you help us, we'll help you, is that they are actually now giving creators, so creators of the meme coins are getting fee generation as well now. So they didn't cut their fees, they didn't cut their revenue, from my understanding. They added more of a fee to people who are buying them, but creators can now receive revenue generated from Pump.Fund. So it's the flywheel effect, I guess. If you're creating a meme coin on there and you make some money, then you're going to want to try and do it again, or other people are going to try and do it. So it's basically, a flywheel effect of trying to get more people using Pump.Fund again, because obviously its impact or its revenue has died down as meme coin has died down, but they're now trying to obviously explore more ways to keep the interest involved and get more creators involved. Sharing revenue, I guess you could call it to a degree, but it's a very good use case, I guess, of showing, hey, we are a profitable company and we are going to share that with some of the people who helped made us a profitable company. But not retail. It doesn't go to retail.
Yeah, that's a key distinction there. And for anyone, there's revenues that a lot of protocols generate, and then there's also, fees that a lot of protocols generate. And, I think it's a sign of this immature market in a way that we don't yet have a consensus sort of definition of all of these things. But I think Uniswap is always a great example where the protocol itself generates, significant revenue, but significant fees, but they all get distributed to liquidity providers. And even Uniswap Labs, a separate third-party company building on top of that, it takes a bit of a clip for their own centralized company. The Uni holders, still don't get any share of that revenue, even though the protocol itself generates significant fees. But yes,
what's of interest to talk about here, though, is that Pump.fun is the like leading one in this space, but I know Bonk, the meme coin Bonk, they came up with their own. I think is it Bonk.fun as well? Or it's Let's Bonk.
Yeah, something's yeah.
But
That's
they are
right.
basically, I guess it's kind of like a vampire attack going after Pump.fun because they're basically copying and pasting what they're doing, except there's a token attached to it. And so this reminds me of the Uniswap and
Yes.
SushiSwap days when SushiSwap basically said, we'll do what you're doing, but we'll allow a token, and that token then we can generate value towards the actual end users and the users of it. So this is
Yes.
crypto, and this is what you can do. So Bonk.fun has its token, and therefore revenue actually goes towards the token holders, I think by a buyback system rather than actual fee generation. But it's interesting to see again at play here whether a vampire attack like SushiSwap did to Uniswap can occur on Pump.fun. And so rather than Pump.fun keeping all the money, or Pump.fun and now it's a little bit going to the creators, do they get to keep all the money, or should someone retail get the money? And this is the experiments that get to play out in crypto right now. And I'm interested to see how that one goes, to be honest. I'm not interested in investing in any way, shape, or form, but it'll be interesting to see how much of Pump.fun's dominance gets taken away by its competitors now.
Yeah. In terms of what's coming up in the industry or things to look forward to, I would just put here Bitcoin 2025. We saw, I think, Bitcoin 2024 famously. Donald Trump, then who was still campaigning to be president, he spoke in Nashville. I think it was last July, and that really sent a rocket up the price of Bitcoin. Here we are in Las Vegas this year, and we see a lot of familiar faces on your screen there. I just mentioned this because we may see some price sensitive updates or even comments rather than actual announcements themselves. The likes of David Saxon, maybe JD Vance, I'm looking at there to, maybe hint at something that may be coming up. Otherwise, some product updates for the likes of mainstream sort of fintech companies like Robinhood could also be a price sensitive update in terms of, Bitcoin itself. Even though it's a small asset class, it still doesn't take, or still a small asset, it doesn't take much to actually, drive the price higher, particularly in moments like these where macro uncertainty is much lower than it was in recent months. So that's just something that we do have coming up. But otherwise, underrated versus overrated. We'll finish off this episode as we always do, Simon. What have you got for us this week in terms of overrated versus underrated?
So I'm simply just going to talk about price and how underrated it is that Bitcoin is so close to its all-time high, and I don't think it's really being talked about much. I think the markets in general, and especially crypto markets, are still reeling from how far down we went. Because, Solana is still down nearly, 40% from its all-time high. So altcoin people aren't feeling that excitement. But with Bitcoin right on the precipice of all-time highs, and possibly by the time you're listening to it is already in price discovery area, that's really underrated. I think the market is not looking, the market is not aware, and I think that's a good sign in general, because that means there's plenty to go, because there's not hype here, there's not excitement in the market yet, and yet we are so close to pushing into that space.
You're so right. Like this chart, for anyone watching on YouTube,
It's a good one.
yeah, like just searches for Bitcoin. Sure, there's people that always push back and be like, oh, well, everyone knows what Bitcoin is. Like, why would they be Googling it? But I still think if you're seeing Bitcoin go up above 100,000, you might just quickly Google Bitcoin and see what the price is. Even though people know sort of what it is, doesn't mean they just stop Googling it in general. But certainly the trend here is well down from its all-time highs, certainly back sort of during the COVID pandemic era, but then also even just late last year when Trump got elected.
Trump got in.
Yeah.
There you go. Trump got in.
Yeah, and I dare say crypto would be even I guess more painful to look at there, which again, as you said, is an opportunity in a sense, given how much of the retail money is still just totally out of this market at the moment. So yeah, very interesting times as we're on the brink of all-time highs. For me this week, I've got underrated, I guess similar in a sense to just how difficult it traditionally has been to, let alone understand crypto, just get involved, and participating on chain has been a challenge for as long as we can remember. And I'll give a shout out to Jupiter here, which continues to, I guess, improve the functionality of their mobile app. And I was, really cool to see this new feature, Universal Send. So I guess the premise here is if you're onboarding someone or talking to someone at a pub or one of your mates, often it's still been difficult to actually show them or get them onboarded onto crypto. This was a really cool feature where even if this friend or whoever you're talking to doesn't even have anything to do with crypto, you can still send them any token, whether it's Solana or USDC or meme coins, and then they can then I guess reverse that and set up a wallet if they want to. From my understanding, I need to even test it out myself, but really cool to see developments coming along in terms of user friendliness of crypto, which has historically been restricted to laptops and computers and browsers. As we know, the world's going mobile, so crypto is slowly but surely getting more easier to use. So that was a highlight. I'll give a shout out there for Jupiter.